Welcome one and all to the wonderful evening. So today we are very fortunate to have Sri CA Kamal Aggarwal ji, a renowned chartered practitioner from the north. So he is throwing the light on the intricacies, especially on reporting the blocked credit under section 17.5 and the reverse charge mechanism, and along with the service of notices by the department. So in this regard, we are very thankful to Host Books to organize this webinar, and I welcome Sri Malladi Srinivasarao Garu, the elect president of 2021 of All India Federation of Tax Practitioners, to the program. So I welcome Kamal Aggarwal sir to the program. Welcome sir. Happy welcome to sir.
Thank you.
And now I welcome Mr. D.M. Bhattat, Secretary General of the Institute of Tax Practitioners of India, to introduce Kamal ji with his profile. Bhattat sir. Bhattat ji.
I am there. Can
Please.
audible?
Yes, you are audible. You can.
Okay. Yeah. Good afternoon, sir. Good afternoon to all the participants. And good afternoon, sir. I welcome Mr. Malladi Srinivasarao of Tax Practitioners, sir. Sir, I have been given to introduce Kamal ji, and it is an iconic person. It is a good opportunity for me to introduce a person like him. Sir, Kamal is.
It is not audible, sir. Button, sir, it is not audible.
In 1991. How? Pardon me?
Your audio is not audible, sir.
Sir.
It is now. It is
My
audible.
audio is not audible. Is it
Now you
not?
can. Now you can. You just a little come closer to the mic, sir, and you can please. Just come little closer.
मैं रावाले.
Bhattat ji, are you audible now?
Oh. Yeah. Sir, is it audible?
Yes.
Hello?
Please continue.
Hello?
Continue, sir.
You are audible, sir.
Haji. Hello. Okay. It is not audible.
Audible, sir. You are audible.
Okay. Mr. Kamal sir has a huge number of qualifications and he's been a member of a lot of organizations. Mr. Kamal has worked with PwC, Deloitte, KPMG and E&Y. His last job was Associate Director with E&Y. He currently leads the indirect tax practice of SARC and Associates, SARC and Associates. He is a faculty at ICAI for indirect tax and a regular speaker at various Chamber of Commerce, including CII, RCM, PhD Chamber, indirect taxation, including GST also. Kamal has conducted numerous online and offline training sessions for a variety of audiences, ranging from students to professionals to corporate to revenue officials. He has advised many Indian multinational clients concerning GST, VAT, trade policy and service tax matter. Great knowledge we are going to gain a knowledge of the current taxation. Kamal sir, thank you very much.
Welcome, sir. Welcome you, Kamal, sir. Sir, welcome you, sir. So now I request Malladi Srinivas Rao ji to give the chief guest address. Please.
Am I audible?
Yes, sir.
Absolutely, sir.
Good evening to one and all. First of all, I pray Lord Hanuma to give courage and health and wealth to each and everyone in this pandemic. We are going on webinars through Zoom and online. This online webinars also very educative. Today's I would like to congratulate Sri Sridhara Padasarthi ji, who was taking a lot of pains for getting this type of educative programs to the members, ITPA as well as other professional bodies also. I congratulate him. And secondly, today's speaker, Sri CA Kamal Aggarwal. About Kamal Aggarwal, I heard last 5 to 10 years back through AK Srivatsav and other MM Basin and all other my Delhi friends. The great personality of Delhi in North Zone. It is located in North Zone. He is a very, very renowned person, and he is a very, very mind-blowing speaker for the beginners as well as the seniors also. He is made a research, excellent research in GST from the beginning of the initiation. Today's topic, the reporting Blocked ITC section 17 within brackets 5 RCM in GST written 99C for assessment year 18 and 19, 19 and 20. The GST is a born baby, and our ITPA sister concern, the Chartered Practitioner Institute, is also one of the sister concern of ITPA. This is also a Brahma Manasa Putrika and born baby of our AFTP, the olden AFTP. And about this today's topic, the reporting of Blocked ITC. This is a very much burning problem which is facing all over the countrywide, from Kashmir to Kanyakumari and other places, each and every places. Union Territory is also placing a lot of trouble about this ITC. In reverse charge mechanism as well as the input tax credit which have been claimed by the individuals, firms or companies, or whatever it may be, the body of individuals, societies, whatever it may be. In this aspect, the renowned speaker, today's speaker, Sri Kamal Aggarwal sir, chartered accountant from Delhi, has enlightened us to how do we get this reporting of Blocked ITC under section 17.5 and as well as RCM in GSTR 99C for the both years of the 18-19 and 19-20. And moreover, in relating to the service of notices under GST, this is also one of the very crucial subject because the so many people who are in the rolls and records of the GST, they are getting notices from the state government as well as the central government also. The central government, one side they are giving the notices and the state government also giving the notices. This is a very problematic issue to answer the notices because the tribunal was so far not started, it had to be started, that is to be launched. In this area, if any appeal is there, that appeal should be file a writ petition only before the court of law. But there is no appellate authority, first appellate authority are constituted in GST law. It is already constituted as per the act, but the offices are not started. Some areas like in both Telugu states, Andhra, Telangana. And however, the chief commissioners, they are applying the mind about these appeals and all that, and which is going on. And I request Mr. Kamal Aggarwal to throw out the appeals also in the service of notices, appeals also, some throw on the light on the subject and issues. I once again congratulate all the ITPA members, Chartered Practitioner Institute members, and other members of the giant partner associations, host books also. I congratulate host books because the event is conducted by host books. The host books is a renowned publication in various publications in tax laws. I congratulate host books also, and I thank you for giving me this opportunity. And I would like to give any further comments in concluding remarks. I hand over the mic to Mr. Sedra Sarji and Bhattadi ji to for conducting further proceedings. Thank you very much. Thank you, one and all. Thank you, sir.
Thank you, sir. Thank you, sir. Now, without wasting much time, I request CA Kamal Aggarwal ji to conduct the class, please. Sir.
Good afternoon, everybody. And particularly, I'm thankful to both the esteemed organizations as well as host books. And I've mentioned to the president-elect that I have huge regard for this wonderful organization, which was set up by none other than Mr. Palkiwala and Mr. Mehta. And I do not think any tax professional in this country would not have heard or would not have read them. So I'm really blessed to be talking to the members of these two esteemed organizations. It is really a great honor for me. A lot of topics have been mentioned in today's webinar, and I would try to cover all of them to the extent possible. As we all know, in GST, there are topics and topics and topics coming out every day. And every single topic, you start talking about it and it can take days. So to cover these 4 topics in one webinar, I'll try to do my best and to give you a perspective. But most important, the essence of GST is smooth transition of input tax credit. Now, that was the whole idea behind bringing GST, by combining various laws, that you should have a seamless flow of input tax credit. Earlier, all my professional colleagues would know, we have several credit blockages, like in CST Act, there was CST, which was charged against C-form, was not available as a credit. There was credit restrictions to professionals. Let's say I'm a service provider and I charge service tax, I pay service tax on my output supplies. But if I buy furniture, if I buy computer, I was not allowed credit of excise VAT, which was paid upon my items. So there were, in excise also, the credit was only restricted to items in relation to manufacture. In service tax, it was all relation to used in providing output service. Now, the first time the GST law has actually widened the scope of input tax credit, and they said we will allow you credit of anything input services or capital good used in the course or furtherance of business. And to my understanding personally, the way I have looked at the journey of kind of 28 years in the past of various tax laws, this is the widest scope of input tax credit that has been incorporated in any tax law. And I think we professionals and taxpayers must give credit to the government of widening this kind of input tax credit. So that is just brief about 16.1, because we cannot talk about restrictions of credit without understanding what credit is actually. So as I said, Section 16(1) of the CGST Act that talk about that you can get credit of anything, input services or capital goods, which has been used in the course, or rather, there are very important, but just want to mention for a second. It says use or intended to be used. Now, the word intended to be used are very important. And there have been history of litigation on this. If you look at the CST Act, there also, if you could issue C form for goods intended to be used for those particular purposes. In excise, you could avail credit of the goods you intended to use for in the process of manufacture or in relation to manufacture. So use or intended to use, these are very, very important things. And they intended to use is actually the phrase which would determine how you report input tax credit covered in 17(5). Because there could be situations, we'll talk about it later in a while. So it's very important to keep in mind that law allow you to avail credit of goods used or intended to be used. Now, when we move, and 16(2) and other sections are not relevant for today's discussion, and I'm sure most of my professional colleagues would be aware of them, we can simply go to the provisions topic of the day, which is covered in section 17(5). As you know, 17(5) has 7 limbs, should I say, or 7 subsections. You talk about motor vehicles. So you have a motor vehicle, you have a vessel, you have a conveyance, and you sit in your motor vehicle with your family. You go out for a dinner. So you have food and beverages. Your wife can go to a parlor, which can be a beauty treatment. Okay. So having all that, you sit in the car, you take your family to food and beverages and some health club, and then you go to beautiful house being constructed by some contractor. So you have a works contract service, okay, employed there. In works contract, in construction, you need to buy some material. The contractor say, no, I will not buy this stuff. This thing you should buy on your own. So you tell him that no, cement should be of my quality. You procure cement, you procure steel and give it to him. And then there are some things which are procured from small taxpayers, which is kind of a composition dealer, which are locally available because you are constructing a beautiful farmhouse little outside the city, and where all these regular taxpayers are not there. So you get the goods which are covered, procured from composition taxpayers. Then, there are restrictions of goods being received by non-resident taxpayers, and certain goods which are used, procured for business, but which are in your personal consumption. So this is how the section 17(5) has been structured. It starts from motor vehicles, vessels. It talks about food and beverages, beauty treatment, catering services. It talks to works contract service. It talks about goods received for construction activities. Then it talks about composition dealer, goods received by non-resident dealer, and goods are consumed for personal consumption. Now, all of them are not so critical in terms of our business operations, and not all of them has those kind of challenges that are in some areas that we should focus more on. Now, when we talk about motor vehicle, and just to mention that section 17(5) has undergone a significant change effective 1st February 2019. So we have one set of law which was operating till 31st January 2019. So that is 1st July 2017 till 31st January 2019. And another set of law which is from 1st February 19 till it's operating till now. We need to understand both of them. Now, why we need to understand the law that existed prior? Because the notices for the period starting 17 has started coming. Your clients would be facing those issues for the period from starting 1st July 17 up till now. So you need to look at both the period. The law existed during the first period, that is 1st July 17 till 31st January 19, and the law as stands today after 1st February 2019. Now, first limb, as I said, is about covered in section 17(5) subclause A, which talks about motor vehicle, vessels, and aircraft. If you look at the provisions that existed earlier, they talked about motor vehicles and other conveyance. The credit were restricted on motor vehicles and other conveyance unless except where they were used for making certain taxable supplies and transportation of goods. Now, when they are used for making supplies of such vehicles, they were used for transportation of passengers or imparting training on those vehicles or vessels or aircraft, or for transportation of goods, credit was allowed. Other than those three situations, credit was not allowed. Now, if you look at how the law was structured, onus was on assessee to establish that the particular motor vehicle is used for these purposes specified therein. So onus was on assessee. All kind of motor vehicles, all kind of vessels, all kind of conveyance, they were included there. Now, what happened? In one case, it just came before an advanced ruling authority. ITC was availed on cash carrying vans. You know, there are vans which carry cash for bank from one place to another. Okay, so they were cash carrying vans. They were transporting cash. The assessee went to the advanced ruling authority and say, I'm transporting cash. Should I be getting credit or should I not be getting credit? That authority said, you are carrying money. Credit is allowed for transportation of goods. Money is excluded from the definition of goods. And since money is not included in goods, you cannot get the credit because you are not carrying goods. Matter went to the Bombay High Court, and Bombay High Court made very, very interesting observation, which Mr. Srinivas Rao has also briefly mentioned. You know, in the absence of an appellate authority, we go to writ petition. The Bombay High Court said that the role of a High Court in a writ petition is of a judicial review. It is not of an appellate review. What is the difference? It's very, very important to understand, and it is so important for us to choose the forum at which we should approach. Now, the judicial review essentially talks about the process of decision making. In judicial review under Article 226, High Court will not look at the correctness of the judgment unless it is patently wrong or something. It would look at the process, how this judgment has been arrived at, whether principle of natural justice has been adhered to, whether the submissions of the appellant and both the parties have been adequately addressed. Now, in that judgments of the High Court has said that you have not, authority has not addressed the argument that money is not being carried as goods, not as legal tender. Now, the cash is definitely a legal tender, but for an agency which is carrying cash from one place to another, it is not a legal tender, it is goods. And they said that the authority overlooked or did not adequately address this point, and therefore they remanded the matter back. But the important point is, onus was on the assessee to establish that he was transporting goods. So you need to establish that what you are transporting is goods, and therefore credit should be allowed. And this has led to several situations. When they amended the provisions in respect of motor vehicle, this anomaly was removed, thankfully. Now, what does new provision talk about? New provision talks about the restriction is applicable only in respect of such motor vehicles which are designed to carry passenger up to 13 passengers, including the driver. So if you have a motor vehicle which is designed to carry passenger, that is a passenger vehicle, for passengers up to 13 in number, the restriction would apply. Otherwise, restriction will not apply. So if you are having a cash carrying van, or even a garbage truck or a dumper or similar kind of stuff, that is not a motor vehicle designed to carry passengers. And it does not get hit by the restrictions of 17.5 in the first place. And therefore, there is no need for you to establish that what you are transporting was goods. So therefore, the requirement of transportation of goods has been removed from motor vehicle. And what happened? Because the vessels and other stuff, they will transport goods. So they have bifurcated the entry. So entry A talk about motor vehicle, and entry AA talk about vessels and other conveyance. So it is very positive amendment, would I say, that the scope of restriction has been narrowed down. The onus is, because it is so easy to identify that which is the motor vehicle which is designed to carry passenger for people up to 13. And I believe that a lot of litigation would be saved on this point alone. In case of vessels and aircrafts, the similar restrictions apply. If they've been used for further supply, the credit would be allowed. If they are used for training and other stuff, that credit will be allowed. And if they are used for transportation of goods, the credit would be allowed. Now, their transportation of goods is a requirement still exists, and onus is still on assessee to establish that. And in fact, what constitute goods or not, that's a kind of a separate topic itself. I would request them to have a session on that, because what constitute goods under various laws is a huge topic by itself. So that is how 17.5 has evolved, particularly in terms of motor vehicles and vessels. Then we talk about the general insurance services, repair and maintenance of those motor vehicles. That also falls into the category of restricted credit. Now, there also credit now is restricted only in respect of motor vehicles which are covered in clause A. That means motor vehicle which are designed to carry up to 13 passengers, not beyond that. So if you have a dumper, if you have a cargo vehicle, you are eligible to avail credit, and you are eligible to avail all the credit on their insurance, on their services, and all that kind of stuff. So that is a very positive thing that has been allowed. Moving further, then we have earlier, we used to have an issue on rent-a-cab. The rent-a-cab was specifically disallowed in the earlier regime. And there was a proviso which says that unless if it is allowed or notified by the government under any law for time being in force, the credit would be allowed. Now, there was a lot of ambiguity in that. And in our experience, it was very difficult to argue with GST authorities, particularly at lower level, to have a notification issued under any other law to avail benefit under GST law on that basis. And there was no mechanism, there was no intent, it appears, to issue a separate notification under GST law for that purpose. So there was a lot of ambiguity on rent-a-cab. That restrictions subsequently that has been withdrawn, and rent-a-cab full credit now has been allowed. Then we go to next restriction, which is about in clause B, which talks about your food and beverages, outdoor catering, beauty treatment, health services, etc. And that condition has been continued in the post-amendment regime as well. With this, we have another category, membership of a club or health club or a fitness center, life insurance and health insurance. So there was a situation where it was allowed. It was only allowed when government notifies the services which are obligatory for an employer to provide it to employee. And all these three, food, beverages, beauty treatment, all that, plus your membership of a club and a health club and your life insurance and other services, they were only allowed when it was obligatory for an employer to provide under any law in force. This has gone a beautiful change. They have divided these three sub-bullets into two. Rent a cab restriction has been removed. Now, food and beverages, beauty treatment and all that credit is completely disallowed. And when it is obligatory on part of an employer under any law in force, that is now applicable only to two categories, which is membership of a club, health club or a fitness center, or travel benefits extended to employees on vacation. If you look at clause B, and in B you go to subclause 1, there is a colon there. There's no semicolon, it's a colon, and then you have a proviso. They say that this credit will be allowed only when these services are used for onward supply of similar services. That means if you are availing beauty treatment, you are having kind of, you have a large, you can say center, you have various service providers located in that center, and you may be giving one invoice to several customers which come in for several services. So you are getting beauty treatment services. You have somebody has set up a parlor there. You are an event management company. You are getting food and beverages services from an outdoor caterer or an outdoor catering services. And these services are provided by you as the same service or as part of composite or mixed service. Then credit is allowed to you. But the flexibility or the benefit which was there, that if the food and beverages was mandatory for an employer under any law in force, that has been removed. Now, even if under Factories Act, it is mandatory for an employer to provide canteen services, after 1st February 2019, credit is not allowed. For remaining two categories, the membership of a club or a health club or a fitness center or travel benefits extended to employees, credit would be allowed. Now here the requirement of Government of India issuing a notification, that has been removed. Now there is no need for government to issue notification. SSC has to establish that these facilities have been provided under a law in force in India, and without any notification, the input tax credit can be availed. So that has happened in clause A, which is for motor vehicle, and clause B on beauty treatment and other stuff. Quickly, we'll cover 17.5 and then we'll come back to how to treatment of these under various scenarios and reporting requirement will take place. Then we have next issue is of works contract service, and which is hugely debated. We just refer to in the discussion prior to start of the session. The works contract service says where works contract service has been availed for construction of an immovable property other than plant and machinery, credit is disallowed. Now, works contract service is also defined in GST law necessarily to be in relation to immovable property only. In our VAT law, we have seen that works contract could have been related to immovable, could be related to movable property also. But in GST law, works contract service is specifically restricted to immovable property. And I believe start of the sale tax regime in the country, works contract service has actually kind of held the dominant position in terms of litigation. If I can say the right from Builders Association or Gannon Dunkley in 1958 to the L&T of the world of Supreme Court, the works contract service has never been off the litigation table of any of lawyers practicing in indirect tax. And this is not going to be different in GST laws as well. In works contract service, the credit of input tax credit is not allowed. Input tax credit on works contract service is not allowed, even if you are constructing a movable property which is going to be rent out or which are going to be used for a purpose on which you are liable to pay full GST. Example, you are constructing a mall and you intend to let out the entire mall on which you would pay GST. Still, input tax credit is not allowed. It's specifically prohibited in the 17(5) subclause C. While this law stood, and as it stands today as well, we have a beautiful judgment by Odisha High Court, where Chief Justice of the Odisha High Court was also one of the signatory. And they said, they looked at the entire scheme of the Constitution. They look at the entire scheme of the GST law and the intention behind bringing the GST law, particularly the having a seamless input tax credit. And they mentioned that while a taxpayer is expected to pay full GST on the revenue to be earned from that immovable property, there is no reason why input tax credit should be disallowed. That judgment was not accepted by, I would say, by the government, and that SLP was filed in the Supreme Court against that, and where it is pending. And I think most of our tax practitioners eagerly wait for an outcome of that judgment. In the meantime, I would, I think, suffice to say that several of the high courts and advanced ruling authorities have distinguished the said judgment and not followed that line and sought to disallow credit, citing these express provisions of the GST law and saying that that judgment was in relation to specific facts of that case and therefore cannot be applied universally. I think this is going to be a very interesting space for us to watch out. And equally interesting would be how to ensure that if tomorrow Supreme Court decision comes in the favor of assessee, our assessees are not unduly lose credit which they could have availed. At the same time, if availing credit today should not result in a huge amount of interest and penalty tomorrow, because right now you have a high court judgment. Okay, so one can argue that I have a high court judgment in my favor and I am legitimately right in my legal view or in my legal right to avail credit till the time a Supreme Court overrides that judgment. But the risk of interest and possible interest and losing, the balancing act one has to do, and we'll talk about it in a while here. Similar lines on this is the next clause, where say that you could avail work contract service from a contractor, but at the same time you could also procure a lot of goods and services from the market on payment of GST, and then you can give it to your contractor as a free issue material for him to incorporate that and use in construction of the immovable property. Unless this clause was introduced, the earlier clause of restriction of credit on works contract service had no meaning. People would have employed contractor on a labor rate, procure the entire material, and the purpose would have defeated. Now, in this, by bringing all these two clauses together, the law has ensured that no credit of input is allowed on construction of immovable property unless it is plant and machinery. Of course, if you are a subcontractor and you are doing a works contract service, providing to principal contractor who is also providing works contract service, the credit is allowed, because under the same category of supply, the credit is allowed in all cases, unless it is specifically prohibited by appropriate notification. Now, that is a space which would see a lot of debate going forward. We would eagerly await for Supreme Court decision of Safari Retreat. And also, I'm aware that, in fact, we also advise CREDAI in making representation to the government in permitting or relaxing this clause in allowing credit to real estate industry and to hospitality and other industries, where the entire output is subject to GST, where the huge amount of construction cost, their input tax credit is not allowed, and therefore the entire cost of construction simply goes up by a significant amount. Then we talk about the tax which has been paid by a composition dealer, which is no brainer. I think there was never an intention, there was never a situation where goods or services procured from a composition dealer was allowed as a credit. The situation is not different in the GST regime as well. Goods or services, or both, which are used for personal consumption, definitely where the 16(1) allow you for use in the course or furtherance of business, the tax for personal consumption should not be allowed, and that has been rightly denied. Then the next restriction again is very interesting, where they say goods lost, stolen, destroyed, returned, or disposed of by way of gift or free sample. And that is also one clause, very small, tiny clause, which has gathered a lot of transactions and which has caused a lot of debate. Now, coming to particularly this clause, that where goods lost, stolen, destroyed. Now, what do you mean about these? Because each of this has a very significant implication, and it also has a significant implication or how you report these transactions in your GST returns. Now, when we talk about goods lost or stolen or maybe destroyed or written out, now the question is, you do not know the goods have been received in your unit, and that is how the reporting of 17(5) can be understood. There has been consistency in judicial pronouncements right from Modwed days to Senate, even as the judicial pronouncement will come in GST, I'm sure, that the law as stands on the date of availing credit, that has to be applied. When you use or when you receive any goods or services, there are three taxable events, you can say, or three events, you can say. One is the date when the supplier has raised an invoice. The next event is when you actually received the goods and services. And third event is when you actually avail the credit. Now, first event is supplier raising the invoice. You do not become eligible to avail credit on that date, because one of the conditions under section 16(2) is you to physically receive goods or services. Once you receive goods and services, you become eligible to avail credit. And that is the earliest opportunity on which you could have availed credit. So you avail credit on the day when you receive goods or services. On that date, your goods are not stolen, goods are not lost, goods are not destroyed. There may be a situation where you buy goods for use in business, but you use them for personal consumption. There may be a situation where you buy goods for business purposes, but subsequently you give them as a free sample or as a gift. And that is where the issue comes in. Now, if you know that credit is not allowed, you buy a motor vehicle which has a seating capacity of 5 people, you simply are not allowed input tax credit, you do not avail credit, you simply capitalize the GST charge in on the motor vehicle and you charge depreciation on that. No difficulty arises there. So if there is a state way provision that where input tax credit is not allowed, is blocked, you simply charge that and report accordingly. In your returns also, you show it, it's a block credit under 17.5. There is no difficulty arises there. The difficulty arises is where there is a change of situation during the course of doing this business. And in that, we need to keep in mind the time limit for availing credit also. So we need to marry these two provisions. So where you avail, you receive any goods or services for the purpose of business, and also keep in mind the section 17.5 overrides section 16.1. So there is an argument, and very beautiful argument, that when I'm doing a gift or I'm giving a sample, I'm doing it for purpose of my business. Giving free sample is undoubtedly in furtherance of my business. There cannot be any argument about it. But 17.5 overrides 16.1. And when 16.1 allows it and 17.5 denies it, you have to comply with 17.5. And even if it is in the course or furtherance of business, credit cannot be availed. So that is the situation of the law. Now, what happened when the goods moved from 16.1 to 17.5 or from 17.5 to 16.1? How it happens? I have purchased certain things for my business. I am a trading company. I intended to use them for my business, for resell them, and I have availed credit. But tomorrow I have a customer. He says, your things are very good. I want to buy 500 pieces of this, but I need 5 pieces as a sample for me to go and test in my laboratory, show it to my prospective customer, show it to my management. So give me these 5 pieces as sample. Now, a transaction which was clearly covered in 16.1 moved from 16.1 to 17.5. Having availed credit, I have to reverse the credit on those 5 items in my books of accounts as well as in my GST returns. On the other hand, I have purchased certain items for giving as a sample or as a gift, but I could not give them a sample. In the meantime, a customer walks in and the customer say, I am in need of these items and I will buy your entire quantity. Why are you worrying about samples? You do not know your items are very good. And these are not medicines which says physician samples not to be sold. I purchased them from market. They were new product, but I thought I will create market. There may be time where people will start liking this product. So I will give them a free sample. So customer walks in and he says, I already have a very ready market for this. Why don't you sell this entire quantity? You can buy another stuff. I've already given it to various people. You may not have to do sampling of that. I said, I'm so happy. My entire money is saved. The transaction which was there in 17.5 have moved to 16.1. Should I be allowed credit? Of course, I should be allowed credit. Why not? Now the question is, how do you do that? Law does not specifically allow me. It does not specifically restrict me as well. In my 3V, I do not give a charge credit on invoice to invoice basis. And I'm also actually of that old school where technology has not taken that kind of a prominent role at that point in time. We grew by the understanding the law is the supreme and the subordinate legislation, that is rules, are meant to implement the law. And technology which has come now, it comes even at the third place. And I still believe that. And that is very well, it's actually need to be understood in GST practice more than anything else. That if there is something which is allowed by GST law, but and by the rules framed thereunder, but not allowed by GSTN or by these forms, okay, you do not lose that right. The law it stands. There can be mechanism. You can simply write a letter to your jurisdictional authority, stake a claim at some level. It is going to be allowed. Now, coming back to this, what I believe that an appropriate disclosure, the moment there is a change in situation, you procure goods for use in business, you have availed credit, but thereafter you used it for the purposes of covered in 17.5, or these goods are lost or stolen or destroyed, you need to reverse that credit and show it as a blocked credit. The moment you have a block credit, you have purchased said items which are covered in 17.5, but you have used them in purposes of businesses. So you can avail that credit, provided you are well within the limits specified in 16.4 for availing that credit. It is also to be understood that 17.5 overrides only 16.1 and 18.1. It does not override 16.4. So the moment you are able to shift and able to demonstrate, the credit should be allowed. And if you are able to understand this fundamental principle, I think the reporting requirements will become easy. We have several situations in on various sub bullets of these things where credit has been allowed by one advance ruling, credit has not been allowed in one advance ruling. I'm not going to those kind of discussions, because the what I understand is the crux is of reporting requirement, how you report it. Now, there could also be a situation where you move from one place to another and appropriate treatment has already been done in your financial books of accounts. Your balance sheet is already done. Okay. So you have already charged certain items to your profit and loss account, but now you have sold them. You have charged to profit and loss account, and you have charged your GST credit also to the expense account. Subsequently, you have sold those items. Okay. So how do you do that? Because it is already there in the profit and loss account. You have already charged it to P&L account. On the other hand, sometime you have availed credit, it is lying in your current assets, but you have used them as a free sample. You have used this as a personal gift, personal consumption, they've been destroyed. Where you are moving from, you can say 16.1 situation, where you purchased it for sale and you availed credit, credit is lying in your current asset, and you used it for restricted purposes. The treatment is rather simple. You charge it to P&L account along with the input tax credit that you already availed. If you have input tax credit in your credit ledger, you can utilize that credit ledger for payment of that tax. Otherwise, that has to be paid in cash through GST DRC 03. So that treatment aligns with your books of accounts and your GST returns. So appropriate disclosure can be made in the books of accounts, in the financial statement, and in the GST returns, both in GSTR 1 and 3B, and subsequently in 9 and 9C. The difficulty arises is where you already charge it to P&L account, and you need to then use that credit for purpose of payment of output tax. That is where you need to be careful about. Now, there could be a situation. First, you need to see whether you are still within the time limit by which you can avail credit. If the time limit has gone, definitely the credit cannot be availed, and you need to pay tax from your own pocket. The credit is already gone. But assuming you have a time limit available for availing credit, please see that no provision of the GST law require you to avail credit or to reconcile or to have same treatment in your books of accounts and the GST returns. Or in other words, availing credit is not dependent on your financial books. So that is first thing. We always seen in case of moderate days where all your RG23A and RG23C, etc., they were considered as memorandum books. They were not considered as financial books. And in my GST also, there are several transactions like stock transfer and other stuff, which are treated differently in financial books and treated differently in the GST law. And thereafter, so you can avail that credit, which is already charged to P&L account, already in the audited balance sheet, which is signed and sealed, and where it has gone to P&L account. There is no restriction in the GST law by which you should not avail that credit. Financial books are made on the basis of accounting standards, and we have old decision of Supreme Court in Tuticorin, of course, in case of income tax, where they categorically held that provisions of the law would override what is there in the accounting standards. So here, provision of the law is allowing you to take credit, you avail that credit, and you can discharge your tax liability on that. Of course, you cannot have double benefits. So definitely you need to make an appropriate disclosure in your financial books and your audited financial statements of the next year by way of reversing that credit in financial books as well. That disclosure is definitely required. The point that I'm trying to make here is that having charged that credit to the books of accounts and to the financial statement should not restrict you to avail credit in your GST returns if the GST law is permitting you to do so. And I hope I'm able to clear my point on that. So that takes care of our provision on our blocked credit. This thing, there are, as I mentioned, I have not addressed the specific issues in respect of each of 17 filed items, which can take maybe at a separate session. But moving on to next topic, the RCM, and particularly RCM on goods. The RCM on services, by far now we have reasonably well understood. We have a section 9.3 and 9.4 by which two separate categories of reverse charge was introduced in the GST law. One was the specified transaction, where government specifies the particular set of transactions which are liable to be charged to tax in the hands of service recipient, or rather recipients, regardless of the registration status of the supplier. And there the law itself has shifted the liability on the recipient. Now recipient is liable to pay, whether supplier has paid or not, that is of immaterial. And we actually encountered this question several times from businesses or clients, that if my supplier has charged tax, should I pay or am I liable to pay? The answer to that question is in twofold. One is a legal response, which is settled by Supreme Court in various decisions, even in Govind Saran, Ganga Saran. There are determining the person liable to pay tax is an essential legislative function. It cannot be even delegated by way of delegated legislation. So when law fixes responsibility on a particular person, that person alone is liable to pay tax by a mutual understanding or by some conduct of these two parties. The liability cannot shift from one person to another. So that is a legal question. And we always advise that even if your supplier has paid tax, you are not absolved from your liability, because you are the person liable to pay tax under the GST law. There are several decisions of SESTAT in service tax regime, where SESTAT has taken a lenient view, and they say the intention of the law is not to collect tax twice. If under ignorance the service provider has charged tax and service receiver has not paid tax, we can still live with that situation, and we will not like to fasten that liability on the service receiver. In several cases, SESTAT has taken a lenient view. In case of a notice, we can probably take that shelter, but definitely at the time of advisories or advising clients, we must ensure that the person liable to pay tax in terms of sections 9.3 and 9.4 and the appropriate notifications issued thereunder, they discharge their tax liability, not somebody else. Now, coming back to the RCM on goods. The RCM on goods actually is little typical. And there are two notifications on RCM on goods. One is under section 9.3 and one is under 9.4. So 9.3, we have all kind of items which are, you can say, cashew nuts and those kind of stuff, which are chargeable to tax in the hands of the recipient, regardless of the registration status of the supplier. Typically, these are agriculture produce. So by definition, you can say the supplier would be agriculturist generally, and he would not be registered. So by implication, they also are of the same nature as of 9.4, but they are issued under 9.3, and we need to be careful that even if they are being received from a registered person, the recipient of supply is liable to pay tax. On the other hand, the other notification which is issued under 9.4, particularly in relation to real estate industry, that is where the challenges are more, I would say, in terms of, and there could be financial implications as well. And even if because of there are financial implications, so one has to be very careful how to deal with this situation. In 9.4, if a real estate developer or promoter is buying goods from unregistered persons, he is liable to pay tax under reverse charge mechanism. And he becomes eligible for those notifications if he is buying 80% of goods from registered persons. But for 20%, he is liable to pay tax. And the notification also specifies that he is liable to pay tax at the rate of 28% on cement and on 18% on all other items. It is very important for us to know that 18% rate is applicable in terms of the said notification, regardless of the rate of tax applicable on that particular item. So there could be a situation where a particular item is charged to tax at 5% or 12%. But if you are covered under 9(4), you are still liable to pay 18%. So it becomes a very significant financial burden on industry. So one has to be ensuring that where there is a tax arbitrage, the item which are charged to tax at 5% or 12%, they have to be procured from registered person only. Because ultimately there is input tax credit is not available. And if you are buying from a registered person, you do not have any additional tax liability. But if you are buying from a 5% item from an unregistered person, you have a 13% additional tax liability. So that is where one has to be very careful about it. Now, how do you report RCM transactions? Now, RCM transactions, when you, because in RCM, there is a two-way situation. Let's say I procure certain goods and services today. I have a liability under RCM that accrues today. But that is not due. In case of goods, it is 30 days or in or payment, or in case of services, it is 60 days or payment, whichever is earlier. Now, when I receive, let's say I receive legal services, I am liable to pay GST on that under reverse charge mechanism. So a liability should be created under legal services under reverse charge mechanism. It is a liability which is not yet due. At the same time, I am allowed input tax credit of the GST that I pay on legal services under RCM. So I should create a notional asset as well in my books of accounts. So both my liability, it is not due for payment. My asset is also not yet eligible or available for availment or for utilization. But I need to have those appropriate disclosure, because that is the liability that is recorded, that should be recorded on the day I receive legal services. Because I became liable. The moment I pay, then I need to discharge my tax liability, paying RCM under cash. And the moment I pay reverse charge mechanism, I become eligible for availing input tax credit also. So both my liability become crystallized by paying. Actually, I pay, I discharge my tax liability. And when I discharge my tax liability, I also avail credit of that. That is how these transactions of RCM, that can be for goods, that can be for services, they are to be recorded in the financial books of accounts. GST reporting, of course, in GST, there is no reporting required for when I create that liability, but it is not yet due for payment. In GST, I only declare that liability when it is due as per the GST law. So the moment I declare it, it is due and I discharge it. Of course, RCM, as we all know, has to be paid in cash. You cannot avail input tax credit for payment of liability under reverse charge mechanism. So both in financial books of accounts, you should take a two-stage process. In GST law, it is a one-stage process where you declare that liability. So that is how the reporting requirements of reverse charge mechanisms are taken place. Okay, so what is my third topic of the day?
Notices under GST.
Notices and summons under GST.
If time permits, we can definitely take it.
Sorry?
If time permits, within that, we definitely, if you can cover in a nutshell, we can definitely.
Okay. Now, coming to the notices and summons under GST. And I would say this is one of the very, very important topic. This is one provision which would impact a composition dealer right to Mr. Mukesh Ambani all taxpayers, entire spectrum of taxpayers, whether under state, whether under center, whether in composition, whether in special states, everybody and every tax professional would get attracted, get hit, and they should be very, very cautious about this situation. We have two sections. We have one section 169 and we have one rule 142, which provides for these services of notices and summons, notices, orders, several of these communications. Section 169 talks about various modes of services of notices. It talks about that notice can be given to the authorized representative, it can be given to the SSC, it can be given to the consul, it can be given to his relative, it can be at his place of business, it can be served on the email, it can be sent on his email, it can be sent on by way of a registered post, it can be on the common portal. If there is no mode available, it can be pasted on his place of business, or it can be given in newspaper, it can be on a prominent place in the tax department. So there are several mechanisms or modes of services. They have been specified in section 169. Now, when you go to rule 142, which has been enacted or which can be formulated for implementing section 169, it talks about only one mode, that is uploading by way of DRC 01 and 02. Now, DRC 01 and 02, we all know they've been uploaded on the common portal. The common portal is the portal maintained by GSTN, and there is an ambiguity on that. I'll come to in a moment. Now, what happened in two High Court decisions? They say that in one case or in both the cases, it was uploaded on the portal of the state VAT department. Or just to take a step back, the notice was uploaded on the portal. The SSC did not get any communication on that, and nobody checks the portal on that regularly. He missed that notice. He could not reply to that notice, and thereafter the order was also passed. Now, after order was also passed and his GST registration was cancelled, thereafter he get to know that he could not reply to the notice. Also, he was not aware of the order because both were uploaded on the portal. He did not receive an email. There was no physical communication, and there were no. So he went to the High Court. He said there is a violation of principle of natural justice. I did not receive either the notice or the order, and therefore I could not apply for this revocation or restoration of my registration within 30 days. The High Court says uploading on the portal is a valid mode of service under section 169. The notice is validly served, order is validly served. You have a statutory mechanism of going to appeal. You please file appeal and take the route that has been prescribed under the law. Now, in Madhya Pradesh High Court, there were notice which was sent on email. The email is a valid mode of service under section 169. But at rule 142, which is for implementing section 169, it talks only of common portal. And Jabalpur High Court, they said that it is not a valid mode, okay, provided under rule 142. So it is not a valid notice. The notice sent on email was held to be invalid. in other decision, one honorable High Court, they said notice uploaded by state VAT department on their VAT website is also not a valid service. Should be on the common portal. So by this, what happens is that notice which is uploaded on the common portal, that is the only valid mode of service. And once it is uploaded, it is also a valid service. So these three judgments, they are, while they protected the assessee in one or two cases, but they are also should awaken us that it is our duty to ensure that common portal of the assessee is visited regularly, so that if there is any notice which has been uploaded on the common portal, we should become aware of that, and that notice is appropriately responded to well within the time. Because one High Court has held it a valid service. Tomorrow, if you go, there is the period for statutory period for replying has gone. Order is passed. The statutory period for filing appeal also gone. Condonation also gone. What do? You have no mechanism. You have no solution available. And given the judiciary thinks that no, you have been sleeping, you should have taken care. And some honorable High Court will say that we cannot come to your rescue because all these notice was validly served and you had statutory remedy which you did not avail of. So you cannot now come to the writ court once you have exhausted once you have forgot to avail your statutory remedy. And that is going to be extremely unfortunate situation, both for assessees, for taxpayers, as well as for tax professional. Then a demand or a situation arise in a business only because we were not able to appropriately respond to the notice. And now what happens? The department as a tool, it will simply, by pressing of a button, block your availability to avail to generate e-form. They will. Now, one fine morning, your client may say, okay, I'm not able to generate my waybill. Why? Registration got cancelled. Why cancel? And you find out the notice was uploaded, the order was uploaded, it was all done some 4 months back. Now what do? And therefore, my humble suggestion to all my professional colleagues, kindly keep this on top of the board kind of issue. Ensure that every registration portal is visited very, very regularly, because what I've seen that there are very less time being given. I've seen notices in Gurgaon by state authorities giving only 3 days time for you to respond. Now you can always go back, say, sir, this is not a sufficient time. You need to give me an extension. What if you do not even get to know? You do not go to the authority, and the way authorities operate sometimes, it is possible on 4th day, they pass an order. I actually have seen an order just about a couple of days back for Odisha High Court. And High Court has taken tax officials also to the task. What happened? The notice was issued on 9th of November. It was answerable on 12th of November. The assessee received the notice physically on 13th. It went to the department on 13th itself at 4:30 in the evening. They say, no, we have already passed an order and dispatched it. Now you go to appeal. In Gurgaon, there was a GST number of a very large e-commerce company was cancelled. That was all over in media. And subsequently, Haryana state tax authorities issued a clarification. No, we found that the registration premises was moved. They moved from this place to another. And when they responded, we restored their registration. But you look at the sequence of event. The notice was issued on 7th, which was Friday. The client responded on Monday, the next working days. But in between, the registration was cancelled. Now the lightning speed at which tax authorities are working these days, okay, it becomes so difficult. And I would request host books, if they are listening to it, that kindly develop a solution that the moment there is a notice posted to common portal by any tax authorities, he should get an email alert and a web SMS alert to the taxpayer. And I request host books, please, because that is going to be a huge service for the taxpayers and tax professional. It is humanly not possible for to visit every portal of every client on every day or every week. Sir, you want to say?
Even the middle, just I will intervene, sir.
Yes, sir, please.
Actually, the GST practitioner's login is there,
Yes.
where the clients have been assigned to comply through their login. If they at least make all those notices available with that practitioner, that will also a good help to the serving community.
Absolutely. Sir, there should be mechanism, because it could be practitioner or practitioner also. He may not get chance to look at that. So if there is an alert, which I'm sure hostbook can take up with GSTN and create that kind of functionality, it is going to be huge service to the professional as well as to the business community. But another is interesting aspect to it. You know, if you look at the definition of common portal, that definition does say that common portal will be notified by the government for the specified purposes. If you look at the common portal, the portal has been specified for the purposes for filing returns, for registration, for refund. There is another set of portals which has been notified for generation of e-way bill. But there is no portal as of now which has been notified for issuing notices or for issuing orders. And none of this fact was brought before any of the High Court. High Court has said that Rule 142 says about common portal, you upload in the portal. But there is no portal. The portal has not been notified as yet. And that is how we are implementing GST law in the country. That talks about all that. So, but given all that, I would still suggest, because all of the SSCs may not be in a position to go to High Court, we may not have that kind of time and energy and means with every SSC. So it is important that we address these issues without going into whether a portal has been notified or not. Okay, because those kind of issues can only be heard at a High Court, not at the departmental level. So please ensure that you visit the portals regularly. You look at the notices or order or any other communication which has been issued, and it is appropriately responded to. Sir, just
Please.
I think this is all the topic that was given to me.
Yes, sir.
Sir, Parsal, sir.
Yes, sir.
So here I am, this is one section where I am some practical problem. What to ask.
That we will take it up. In the question and answer session, we will take it up. Now just we will give some 10 minutes break to sir, and Sujit Chaudhary ji will just give 10 minutes deliberation. Sujit Chaudhary ji.
Thank you, Siddha sir. Good
Sir,
evening
you
to
can
you.
share the screen.
Thank you, Kamal sir. So
Thank you.
I've got another opportunity today to get with all of you again. So I'm sharing my screen. Just please confirm whether you can view it or not.
Yes.
Okay.
desktop
So
screen.
yes, sir. I will just give a brief. Many of us met earlier also. Just I will give a brief of Hosebook Limited. Our company, Hosebook Limited, is Gurgaon-based IT company. We are into cloud computing software, which provides you with all-in-one solution at one place, like accounting, GST, e-way bill, TDS. POS is also there with separate segment. So we take over all these things, and all these things you get it in cloud. That means you get it anytime, any place. These things you will be available. We are in very good with GST. You can use our GST software for your reconciliation with. Right now GST is bringing all this to be reconciliations right now these days. Plus the major talk about right now is about e-invoices. Nowadays e-invoices is the main buzz or not. 500 crore club already into the invoice sections. From January 1st, 100 crore club will be there. So all these things we have taken into consideration and made the life easy for all the business owners and the tax practitioner who are providing this service to this type of company with turnover of 500 and 100 crore. So I will be showcasing you a demonstration of how, with the help of GST, Hostbook GST, you can generate your e-invoice without changing your current software. Also, you can generate e-invoice from our software directly. There are both the methods. So first methods I will be showcasing you with the Tally. Generally in Tally, when you are raising your bill, you just have to do your day-to-day billing work only. So this is only sample where I am working here. So in the sample, I have to just raise some smaller invoice due to the problem of date, live registration. So I will be using a smaller figure here. See here I have generated one small invoices and kept it ready for you to visualize over here. Normally when we raise an invoice, what government want is the few things, which is a party GSTN number, your GST number, invoice number, HSN summary of the inventories or taxable value, and all these things government want. So what we do at Hostbook, we are a registered GSP provider of government, and so we have been allotted API where we are taking this data, and in the background we are playing a major role where we connect the Tally, either ERP, either SAP. We connect that thing from the front end, take all the data, connect it with Hostbook, and send the data to IRP. From IRP, we will be fetching your IRN number and the QR code. In this scenario of example, we are using Tally. We can use any other ERP also, and we can use SAP also for the same purpose. So here is the login with Hostbook, where we will start the connection with the IRP through Hostbook TCP. So once we have logged in, the successful authentication is done here. We will move to generate our normal invoices. Normal invoices contain your normal things. You don't have to do any extraordinary thing to generate your invoices. You just have to save your invoices, go ahead with your invoices, select parties, select your inventory, do the taxation part, and move ahead. Here you can see in the given form, we have place to fill the IRN number, acknowledgement number, date, and cancellation date of IRN number, which are right now blank, as the IRN number not yet generated. So in this scenario, I will be saving the invoices here. Just I will do the save invoice. What it will ask immediately, do I want to generate an IRN number invoice? So I have to just press the yes over here, and immediately I will be getting the IRN number from government portal directly. So the 64-digit alphanumeric IRN number is generated with acknowledgement number and date. So once it is ready, it can ask you e-way bill. If you want, you can generate the e-way bill also. So I can put yes also here. So e-way bill also simultaneously generated for the same invoice. So both the thing ready. Once both the thing ready, I have the liberty to just give the printout from here, where a QR code will be generated, and your invoice is ready to print with e-invoice number, IRN number, and QR code. Here at the top you have your e-way bill number. Here you have your IRN number, and here you have your QR code. Basically, for e-invoice, IRN number and QR code is required. If you are using the same invoice for e-way bill, you can generate the same over here. In one single step of invoice saving, you create both the things. So this is how we integrate with third party, where we don't stop any entity from changing their mode of operations. They can do their operation in whichever ERP they are doing, whichever Tally or other software they are using. We can just integrate with their software and we can provide a one-step solutions to them. In scenario of our hostbook, anybody can just log in our hostbook software, take a service of it. They can create an invoice in hostbook, and from there they can generate the e-invoice. So I will be demonstrating that part also to you. This is our hostbook GST software, where we have to log in for the of e-invoices. I have to simply create one invoices over here. Take my inventory and save the invoice. Once the invoice is ready over here, we have e-invoice option over here. Here also you have to get the connectivity which we done in Tally. Here also we will do the connectivity. We have connected to the IRP now. So now once we are connected to IRP, we can now generate the e-invoice for this invoice. So it is asking for generate. The e-invoice generated successfully. So once it is generated, we'll move it from this tab to the next tab, generated e-invoice. And here it is, the first one. I have to just go and take a printout of e-invoice. This is how your e-invoice printout will look with hostbook software. If you don't want the header, you can print without header in your letterpad itself. So the IRN number will go to down. This is how you will get your IRN number over here and QR code perfectly working over here. In this scenario, you have the option of cancellation also. Once you have generated, you have some time limit in which you have to cancel it. Otherwise, you have to raise a credit note for the same. So cancel IRN is there. So if you want to cancel the IRN, what is the purpose of cancellation? You give the purpose over here, mention the remarks, and do the cancellation. So thus e-invoice will be cancelled over here. Same case in Tally also. Once your e-invoice is generated, you need to cancel e-way bill first from it, and then you can cancel the e-invoice. So now e-way bill is generated. I will cancel the e-way bill for this scenario successfully. As you can see here, e-way bill is successfully cancelled. Now I have to just cancel the e-invoice, for which I have to go to the display, statutory reports, GST, e-invoice, cancel invoice, sales invoice. I have to select the invoice, and here it is cancel IRN here. So once I give cancel IRN, within the time frame given by government, we can cancel the invoice. Otherwise, the same has to be raised a credit note. So here cancel is available for you. For raising the credit note, you have the option here also. You can generate for invoice, sales return, that is credit note, and debit note. 3 option for invoice generation, same 3 option for cancellation. Here also you can find in the software directly sales credit note and B2C supply, bills of supply, dynamic QR code. So this is the solution we provide at Hostbooks with ease of working, quickly generation of e-invoice at a click of mouse, or you can say at a click of a button. Thank you, Sridhar sir. This was it. Any query in terms of e-invoice?
Yes, they can put it in the text box. That accordingly we can answer, sir. So directly from Tally, it is integrated now.
Yes, sir.
So whether any synchronization available, sir?
It's all at background, sir. Every synchronization, all thing is happening back at background. You have to just do the login with Hostbooks, and that's it. Only one-time setup will be done by our team at the time of installation. So that will take 5 to 10 minutes, and that's it. And you are with the e-invoice generation setup ready.
Okay.
This has been implemented in a few of our clients, and so far we got an excellent response. The invoicing is, one of the client is on Oracle, one is on SAP, and 2 are on Tally. All 3 places, all 3 software, they've been working beautifully with the Hostbook solutions.
Somshekhar has asked one question: how to enable e-invoice in Tally? Can you answer that one?
Yes, sir. You have to go to after the TDL, which we provide. Once the TDL is given to you, you have to go to add-on features, and then this e-invoice enable feature will be available for you, and you can put the respective data which we will be providing you here, and your setup will be done here in terms of Tally setup. Other setups are also there which we have to do at backend, so we will be doing that for you. So this is the portion in Tally where you generate the set up the e-invoice.
Yes, sir. Okay. Tally Prime also available. Access to Hostbooks.
Yes, sir.
What is the price?
And price you need to get to us.
Yes. So does the software works with the Ramco ERP also?
Any ERP, we will be providing API so that connectivity can easily happen. Any ERP it can work, sir.
Okay, sir. Okay, thank you, sir. We will have first priority the questions on the main topic now. So first, sir, Kamal sir, ready, sir?
Yes, sir.
Yes, sir. Sir, Abdul Razak has asked one question.
Yeah.
So that actually he asks, just a minute, sir. What is the last date of GSTR 9 and 9C?
31st December 20 as of date, as of now.
31st December 2020 is the last date for both 1819 and 1920.
Yes, both.
We had to add both, sir. Otherwise, so thank you, sir. So then,
in some cases,
sir.
Portal has allowed functionality. We have filed a few GSTR 9 for financial year 1920 also, but the 9C option is not available on any of the states' side. There is the notification 91 issued yesterday, which is talking about the extension of time up to from this to 31st March, and that has created a confusion whether that is applicable for annual return also, or that is only for anti-profiting. My reading is that is only for anti-profiting, because all these extension for GSTR 9 and 9C has always been through a separate notification, and I have not yet seen that notification extending that date. In fact,
Sir.
the date for transfer pricing, date for income tax return, date for GSTR 9 for 18-19 and GSTR 9 for 19-20, as well as so all these are on 31st December 20.
31st December 20 only. Yes,
Yeah.
sir. Sir, whether painting work in office and factory is to be blocked under ITC. So I have replied whether I am right or wrong, sir. Just I have texted this one, sir. Since it is related to immobile property, obviously the ITC is to be restricted. Whether I am right or wrong, sir.
You are absolutely right, sir. In fact, several of the advanced ruling have gone even to extend further. And in fact, in relation to even detachable items also, they classified that to be integral part of the building and
Business.
had to be credit not available.
Yes, sir. Yes, sir. Yes,
Sir,
sir.
it is a revenue expenditure. The revenue expenditure, we can take the credit in the repairs and maintenance. That painting and all, it is a revenue expense and expenditure. We can
Sir,
take it. It is
Sir, their question is when they are not capitalizing it, just only on that line they are asking that question, sir.
Okay.
Sudhindra, whether you are right, whether
Yes,
you
sir,
are taking it as an
you are
expenditure,
right.
not totally capitalizing the expenditure.
Yes, then it will, then they can take the credit.
Yes.
Repair and maintenance.
Yes, because then you have to follow not only the GST law here, only on the plain reading lines. You have to follow the law of depreciation also according to income tax.
Correct. It can, yeah, it cannot be capitalized.
Yes, yes, yes. So, sir, one of the retired assistant commissioners, sir, has asked the question. Manual information to be sent in person or by RPID, then only other mode of serving can be adopted. Am I right, sir? Asked, sir. Just I took the advantage just to text this line, sir. That mode is very much there, but in the name of paperless, the things are becoming hopeless. That's what we need to address properly.
See, this has been a dispute in these High Court judgments also. If you go by Rule 142, the only mode that is permitted is by DRC 01 and uploading it to a common portal.
Yes.
So even registered post, registered AD and all that, they are also held to be not the valid mode. But at the same time, one has to also keep in mind the other provision. I think it's section 160, where it says that if the assessee participates or joins the proceeding, he cannot subsequently take the argument that notice was not validly served. So my point is not going into that direction. That maybe if there is a litigation, one can always take all those arguments. But my point was to my professional brothers and sisters, all these colleagues, that take proactive steps and ensure that we do not reach that stage, because that is a lot of wastage of time and energy of professionals as well as for taxpayers.
Correct, sir. Correct, sir. Sir, what should we do if there is a credit blocked in my credit ledger? 86A.
Now, see, first of all, one has to see why this credit was blocked. But then if the credit is blocked, they can go to their jurisdictional officers and they can apply that. Jurisdictional officers have been given power to unblock that credit. Now, if the credit has been on the basis of fake invoices and there's some other stuff, then there can be a situation. But the power has been given to jurisdiction officer. In genuine cases, they can unblock the credit.
Sir, the next question is, can we claim a reverse charge mechanism in current year which pertains to 18-19 and 19-20 that was missed in respective years but paid in 2021, can self-invoice be the base document for such claim?
No, sir. In my view,
No.
there have been. So self-invoice cannot be the basis. The self-invoice is to be generated, but the restriction is the time limit starts from the date of invoice of the service provider.
Actually, the point of service and the time of service both has to be taken into account now.
Correct.
So it has to be incorporated in the books first, and for which year we are going to allocate it, and all these things has to be taken into consideration. Just only on the basis of self-invoice, today I have generated, today I am paying, today I am claiming, will not be a proper way of totally a mechanism what actually it has been mentioned in the law. Sir. So this question we may not answer. Why did you generate GST site without repairing it? One has asked.
I have not done, sir.
You definitely, I have not done it. That you can say.
Not done it.
Definitely, it's not my job.
Yes. I will
okay.
Sir.
I
would have engaged hostbooks to create a GST site.
What about security service in reverse charge mechanism?
Sorry, sir.
What about security services under reverse charge mechanism?
But what is the question in this, sir?
Security service.
Security.
They are availing a security service as how it has to be taken in RCM. He is asking. Vinay Kumar K is asking these questions.
So security service is subject to reverse charge, sir.
Yes, sir.
There is no question about it.
Yes, the question is not framed properly, sir. Okay.
And what I suggest, sir, I think if the questions are not, if they want to ask detailed question, they can send it to you or to hostbooks. I will be happy to answer.
Definitely, sir. Sir, any clarification given on credit eligibility if the opposite party has not filed the return? If the opposite party has not filed the return, any clarifications have been issued in this regard?
Sir, in this regard, there is no clarification which is going to come. Provision of 16(2) clearly says that he should have filed return. And now there has been dispute which is going not specifically on this point, but surrounding this point. So this point may also get covered. The people have been arguing that why somebody who has procured goods or services validly on payment of GST, why they should be deprived of that GST benefit for fault of somebody else. And this question came in VAT regime also. This was there in service tax also. So Punjab, Delhi and Madras High Courts, they have answered in favor of assessee, while Bombay High Court has answered in favor of department. The larger judicial view is that the recipient should not be penalized for the fault of the service provider or for the fault of supplier unless a collusion between two parties to defraud the revenue has been established. But yes, department is not going to give it so easily. If you see, a department is coming more and more strict on this. You look at the rule, which the restriction of 10% which has come in, and if you now see, if you avail credit which is more than 10% of your 2A in your book, in your 3B, the GST portal has started flagging it by way of a red light. So if you avail credit, let's say 1,200 rupees, and your credit in 2A was only 1,000 rupees, the portal is raising a red flag. And I'm sure that red flag would also be getting communicated to your jurisdictional officer, and they would send you a notice on that. So this is not a fight which the government is ready to give. So no clarification is going to come. it at all, there may be a judgment from the Supreme Court, and then we only hope that the government does not amend the law retrospectively.
Yes, thank you, sir. Thank you, sir. Sir, the next question from Mehul Pandya.
Yes, sir.
GTA services and reverse charge mechanism provides services to SEZ unit. Whether SUZ unit is liable to pay RCM because department not granting refund to SEZ unit.
Why department is not granting refund to that, sir?
Yes, that they have to check it out first. Why department is denying, that they have to address first properly.
Correct.
Either, yes, sir. Yes, sir. Yes,
Non-denying or refund cannot absolve him from his liability.
Definitely, sir. Definitely, sir. Where to show DTA sale in GSTR 1 and 3B by the SEZ unit? Can we answer this one, sir?
Yes, please, sir.
Where to show DTA sale in GSTR 1 and 3B by the SEZ unit?
I think I'm not too much into return filing, sir.
Compliance. It is a part of compliance.
Part of compliance, but is there a separate return for SEZ?
No.
Whatever, I think in GSTR 1 and 3B, where a normal taxpayer will show his output liability, similar output liability will be shown by SEZ as well. That's my understanding, but I'm actually very little hands in compliance, so not a right person to answer it. Maybe I'll get my compliance team and respond.
Sir. Yes, sir. Yes, sir. Yes, sir. Can we take input credit of RCM paid on security services?
Yes, no restriction.
Because if it is involved in the business, because why he is asking this question is, hello.
One second.
Hello.
Yes, sir.
Sir, I think he has asked this question because it is a security service. Whether it is in the course of business or in the furtherance of business, that doubt actually they have raised here, sir. Only on that angle.
I think that would depend on the facts of each case, because per se there is no single line which says security service can either be in the course or furtherance of business or not. Security services, if they are deployed at the business entities, business locations, business premises, they are very much in the course of business.
Yes, sir. Yes, sir. Yes, sir.
I don't think we can answer in absolute yes without knowing the facts.
Sir, how to deal with section 36(4) for claiming ITC? Because most of the dealers are filing quarterly, there won't be that much of working capital to pay GST, even in spite of having more ITC in books compared to 2B ITC.
Sir, now this quarterly return monthly payment has actually allowed them to file their monthly invoices. All the quarterly taxpayers can upload invoices on monthly basis, which will get reflected, and this 36(4) problem can be taken care of.
A supportive credit they can avail always.
Yes.
Yes, sir. Thank you, sir. Also, section 16(2) states that if the payment has not been made by the opposite party to GST authority within 180 days, credit has to be reversed. How can we ensure or keep a track on if the payment has been made within 180 days? This is for the supplier, I think, no, sir. The question is, I think the question they have mistaken, I think.
Yeah.
16(2). Okay, sir. So, okay, sir. This is also okay.
Let's talk about payment to the government. There is no 180 days limit specified.
Yes, sir. The question they have framed not properly, sir.
Yeah. And
sir,
again, go back to those judgments where, because that is a larger point, that if I have paid to the supplier and supplier has defaulted it, why should I be penalized for his default? And I have the government has all the means. They can arrest him, they can cancel his registration, they can do whatever they want to do with this person. I have actually no means to ensure compliance by that person. And in that situation, how can law expect me to do an impossibility and penalize me for that?
Sir, Ravi Rangarajan has just texted here. Is it fair enough to link GSTR 2 directly extracted to 3B and people not able to amend or correct the inputs? When the system is having so many problems, what is the hurry of linking the inputs now?
I fully agree. I fully agree, because what we have been told, see, system is not fully stable, is not fully this thing. In fact, if you pull out the reports from using different software, sometimes they give you different results. And even you pull out report from GSTN only, the data come in 8A of 9 and 2A, they also come with different numbers. So in that situation, making it absolute numbers in the returns, that is absolutely not correct. You can give number for reference, which is fine, but ultimate record of the SSC, which should be basis for payment of tax and for assessment and all other proceeding, should be the books of accounts maintained by the SSC. That has always been the position, and that should remain the position, because SSC can only defend his books of accounts. He cannot defend what GSTN has delivered it to him.
Yes, sir. Yes, sir. Please clear us how reconciliation in 2A and 2B in ITC comparison in GST.
I think Hostbook should have a solution to that.
Yes. They have working sheets and other things that they can make use of that tools and other things. Sir.
Yes, we have our tools where we can reconcile the 2A with the purchase data.
Yes,
So
sir.
you can coordinate for a special demo. We'll provide a special demo demonstrating the same procedure.
Yes, sir. They can make use of the tools. Yes, definitely. Thank you, sir. Sir, I request your kind self to observe. Sorry, sir. Freight charges paid on transportation of petrol and diesel, both are non-GST goods. Is it we have to pay GST on RCM at 5% and we cannot claim input tax on such RCM?
Absolutely, sir. See, petrol and diesel are outside GST, that is for sure. But all other activities which are in relation to that business is not outside GST.
Yes.
So let's say, yeah. So normal provision, even freight in relation to petrol and diesel is freight, not petrol.
Yes.
So that is covered, and regular provision of the GST law will apply.
Sir, Sunil Minocha sir has asked one question. Sir, where summons are complied with and all requisite documents filed, but the superintendent does not record the dealer's statement, please guide us whether the issue has attained finality or section 73-74 notice issuance door is open. That is at least 3 months time as specified under section 73-10 or issue of an order.
No, I didn't get the question completely. Maybe.
Minocha sir, could you unmute and can you ask this one, sir?
Yes, sir. Sir, I just wanted to know where the summons have been issued, say, in this month itself, and the same has been complied with, and the dealer has presented himself for tendering his statement. But the superintendent is not interested at this juncture to record his statement. Now the question is that since I have already filed all my documents as asked for, and the superintendent is reluctant to record my statement, now does the officer has any responsibility to give me a final something order that he is satisfied with the summons reply, or that door of 73, 74 section notice issuance that is within 3 months prior to the end of the 3 years from the date of filing of the annual return is there. That is provided in law. With whether that door is open, because that door is for issuance of notice under section 73 and 74 is always there. But do we have to understand that the summons replied have been have really attained the finality and it is a closure of the case?
Now it's clear. The question is clear. See, this is not a unique situation. This is not a new situation. Department sometime goes as it appears to me, that appears to us sometime that department has gone to sleep, and even after taking documents, department has not done anything. They have gone to sleep, or they have not given any communication. They have not recorded statement. And there could be several reasons for that. There could be a situation where department has actually gone to sleep. Now, gone to sleep means they could have got some more pressing matters at hand, and your matter in terms of quantum and in terms of the complexity is not that pressing. So they say, okay, we have still time left in this case. We'll look at it later. That is one situation. There can be another situation where these documents submitted by your client have been sent to the other parties for verification, which department will not even tell you. So in one of my case, we submitted documents to DGCI here in Delhi, and DGCI has sent those documents to DGCI Lucknow. Lucknow has called that party, recorded statement in Lucknow, and sent it back. It took 6 months for this process to happen. Once they satisfied that whatever document were submitted by us, they were in line with what statement and documents they received from Lucknow, then they called us and they recorded our statement and closed the file. So that is also one of the situation. There is also a situation that your client just maybe just a part of a larger investigation being conducted by department, and department will issue show cause notices or decide not to issue show cause notice when the larger investigation comes to a conclusion. So there may be several situations of that. If you want to move forward and to answer, the door of 73, 74 notice is still open. There's no doubt about it. If you believe that your documents were submitted, it is not part of those kind of situations where I just mentioned. You can simply write a letter saying that I have submitted all these documents and I believe no more information is required from me, and we believe our case is closed. That can be one option. Or if you are in good terms with the superior, you can approach him and ask him, sir, kya chal raha hai, what is like that. That can be situation. Or third, the department is keeping quiet, you also keep quiet. Because the meter of department under 74 is going on.
Yes.
Okay. If department has slept, you also sleep.
Okay.
And I have seen cases where the notices simply has become time bar. Department has forgot to issue because there's so much of the workload, and they forgot, and the issue becomes time bar.
Right.
So depending on the how strong your client data is and what is the situation, you have to take that one.
Because sir, privately the superintendent has said so and so dealer is a cancer dealer, and the ITC of that dealer you should reverse it and pay tax and 15% penalty. And to which my client says I will not do it because my transactions were bona fide and all genuine transactions took place, and he may have been cancelled right now, but at that point in time he was working and the transactions are genuine. So in this case, since the summons does not specify the specific offense, and they just require so and so invoices be given, so and so ledger be given, so and so bank statement be given, that's all, and we have done it, And in that case, he has specified so and so dealer is a cancer dealer and go ahead. Abhi hum uske we are silent about it and we are submitting all the replies.
Your location?
Haan ji sir?
Where are you located? Where are you based?
Delhi sir,
New
Delhi.
Delhi.
Delhi only, sir. Let's talk.
Okay, sir. We will certainly get in touch with each other, sir. Certainly, sir.
And there are certain insights that I have on department working.
Okay, sir. Okay.
Training department as well. So I have certain insights on department working, particularly on this issue. I
Okay,
can
sir.
tell you what are the next steps that department is going to take in your case.
Right, sir.
On that basis, your client can take it on.
Right, sir. So nice of you, sir. Thank you. We'll get in touch, sir. Certainly. I'm really glad.
Thank you, sir. Thank you, sir. Sudhindra Rao has asked one question. My cancellation of registration is rejected for not giving reply after a couple of months. Once again, I applied for cancellation of registration as the date of effect of cancellation as shown in first application. Is it correct?
Correct.
But department officer is not accepting. They are telling to give present date. If I give present date, I have to give late fee for filing return. Kindly suggest.
So what I understand from query that you have applied for cancellation of registration
Yes, sir.
from a particular date.
Yes.
And they have not cancelled your registration.
So they are not cancelled. So they have said they have sent a note from clarification for which I have not applied. So automatically they have rejected my application.
Okay.
So after that also they are done after 2-3 months. So again after 2-3 months, once again I applied for cancellation of registration. The date of effect I have given is for the first application what I given, the same date I have given. Because if I give the present date, so I have to file my nil rate and I have to pay the late fee. So, but also the reason what they are in the first my application they have called, what is the reason they have asked? Now later I came to know only. So I have already given the reason. It is now also it is showing in my portal the what is the reason I have given. And so that is why I told and I am cancel. I am telling now I am cancelling the registration from the date first application what I did the same date I am given. I don't want to pay the late fee and filing nil return, pay late fee. That's I don't want. I was given the application the same date. First date itself I given the date. First application date. But officer is telling you give present date. If I give present date, I have to file my nil return of 3 and all. Again, I have to pay late fee penalty. It is huge much. Already 6-7 months is over now.
So
They
you
are
are
still
well within your right to stay with your original date.
okay.
And, the date of cancellation should remain the same. Only thing is they may ask you to pay penalty for late filing of the cancellation application.
No, I have done in first time.
No,
I have done in time.
Sudhindra Rao.
Yeah.
What sir is telling is not the return, the date of application.
See what happened once cancellation of application you filed, they ask you a clarification which you did not reply at that time. So the cancellation application has lapsed.
Yeah.
There is no cancellation application. That matter has achieved finality.
Okay.
Now you are filing another application. Okay, you are saying my date of cancellation was 6 months earlier.
Yeah.
Okay, so a cancellation application should have been filed within specified period from the date of closure of business, let's say.
That is okay. Same in time.
Within weeks
In time.
time.
First application in time.
So
Second
now,
application is I have not seen the notice. That is section 116. Notice I have not seen. I have seen it later after 15 days, 1 month. So I came to know my registration cancel rejected. So then what I have done? So that also come me after 2-3 months. So immediately what I have done? Once again I put a cancellation application, and the date of effect given, my original application date I given. Because if I know if I have to apply, I have to file
Got it. Sir, so actually the same thing is what sir want to say is once the application is rejected, automatically non-est, it becomes non-est. And it becomes new date only of application. So that is to be delicately, that is to be handled with diligence, I think.
yes.
But officer is kept pending. Officer still not is kept pending. I am requesting, but he's not yet cancelled. He still is going on. Process is going on.
I think this will be settled in your appeal mostly. It may go up to the level of appeal, I think.
If he still not, if you cancel it with some penalty or something, then you have to file an appeal.
Okay.
Sir, the last question is,
Yes, sir.
November 20 GSTR 3B is red flagging ITC in excess of 10%.
Yeah.
Is it now पूरा हिंदुस्तान यही हो गया, रेड फ्लैग ही चल रहा है. Is it advisable and legal to avail full credit based on invoices and goods received from supplier, irrespective of whether he has filed GSTR 1 or not?
Depending on to what extent your client is willing to fight. See, departmental officials will always go by the rules. I would say that this is a provision which is beyond the 16.1 and 16.2. The SSC should be allowed full credit to the extent he has received goods and services, and for fault of the supplier of non-payment, non-filing of return or non-disclosure of his invoice, and thereby not coming in your 2A, that should not deprive you from the input tax credit. That is the legal position. But for that legal position, the earliest avenue is High Court. If your client is willing to fight in High Court and the quantum justifies that, then it is fine. If you say no, that quantum is only 5 lakhs, 6 lakhs, and that is it doesn't. It's a small or different small taxpayer or difference is not too much. Then I think that abide by the rules. And don't go for litigation.
Yes, sir. Thank you, sir. Sir, only 3 questions left now, sir. Mehul Pandya ji has just again sent another question.
Yeah.
Department says there is no provision to give refund to SCZ unit because supply made to SCZ is 0 rated. If it is 0 rated, obviously the refund has to be given.
Yes.
The 0 rate itself says 0. There cannot be any tax automatically. So you have to approach the department properly and you have to pursue the issues. Yes. Definitely they will be with you, sir, I think. Sir, regarding Sudhindra's question, Pandya ji has just sent a message. I have filed surrender of GST registration due to proprietor expired. Department not processed even after 1 year. What should we do? Because department says it is not your issue.
It is not
your issue. वो आपने अप्लाई कर दिया, हमने प्रोसेस नहीं किया, क्यों हमें कब करेंगे? आप बैठो चुप बैठो करके बोले सर क्या है?
Keep filing reminder every month.
हाँ, reminder once just expedite the position of your application.
Yeah.
Yes, sir. Yes, sir. Sir, we will take up the last question, sir.
Sure.
How to differentiate between GTA and owner cum operator invoice?
What?
Reverse charge mechanism is applicable on GTA, but many people are giving operator invoices. Owner cum operator, because good transport operator is not under the obligation of GST. That's what actually the question is. Differentiate what is GTA and what is GTO.
Okay. Now GTA is kind of agency who is giving you consignment note.
Yes, on your behalf.
On your behalf. So if he is giving you consignment note, then he is under GTA, it's goods transport agency, and therefore you have to pay tax under RCM.
Good transport operator is not under that obligation because he straight away gives his vehicle to the GTA or he directly issues the transportation of goods by road.
Yes, he does not issue a consignment note.
Yes, sir. Yes, sir. Yes, sir. Thank you, sir. Thank you, sir. Last question has come. Oh, no, it is clear. Clear. Sir, one more question. Can we take it up, sir?
Yes, sir. Yes, sir. Please go ahead.
Sir, ITC taken in the month of February 20 to August 20, not appear in 2A till September 2020. Hence, I reversed it in 3B of September 2020 and paid the liability to that extent. Sir, reversal of ITC not reflected in portal 2A. Now, in November, few of ITC of that period appear in 2B and 2A. Now I have taken that ITC in the month of November 2020, which is appear as ITC aware, but reversal still not looks on portal. Where to reflect it, sir? Kindly guide.
I think you have to take up with the GSTN on this.
It is a glitch only. It is nothing more than a glitch.
Numerous glitches.
Numerous glitches. It is also one among the glitches. So we have cleared all the questions, sir. So we will be very grateful for your patient deliberation and very patient question and answer session. So shall we conclude, sir?
You are the chairman of the session, sir.
Sir, Ashwin Tanna. Is Ashwin Tanna, sir, there? Minocha, sir. Minocha, sir.
Sir, Hanji, sir, please.
Sir, we will be grateful to you. So please convey the vote of thanks, sir, please.
Oh, certainly, sir. So it has been a very enlightening deliberation by our dear friend, Mr. Kamal Aggarwal.
Especially in this juncture.
Especially at this juncture, because things were very hazy, things were in cloud, that where to show, when to show, whether to show in our GSTR 9C or not. Now things have become little clearer, and hope we would all benefit from the deliberations and the knowledge which our dear friend has shared with us. And we are really very thankful to you, sir, for giving us your precious time and enlightening us with your good thoughts and a very, very good command on the subject. I am really thankful from the core of my heart, sir. And I thank from the बहुत धन्यवाद sir, बहुत धन्यवाद. So nice of you, and hope to see you, sir, and hope to meet you also sometime, because I too belong to Delhi, and I would also like to have a discussion and a meeting with you, sir, sometime. Thank you very much, sir.
It has been really honor for me. It is really a wonderful session. I think the session chairman has been equally active as was the speaker.
Yes, sir.
Really wonderful. And as I keep saying, that in any session, it is the speaker who learns the most. So I love to have more and more sessions.
His FAQ bank will be again piled up.
Yes, sir. I'll be happy to take more sessions as and when required by your organization, sir. Really, yes, I'm thankful to you.
We are humble, sir. Your humility has really taken us very far. Thank you.
Sir. Yes, sir. Thank you. Thank you, Sujit Chaudhary, sir. Thank you, Sunil Minocha, sir. Thank you, Sudhindra Rao, sir. Thank you, DM Bhattaji. And I thank all the participants from majoritively from south, because there is very less number from the north, majoritively from especially from Karnataka, Tamil Nadu and Kerala. We are witnessing many members. So we are very thankful, especially. So thank you one and all. Thank you. Happy day, happy career.
Thank you.
Namaste.
Namaskar. Namaskar.
Namaste.